Welcome everyone to our webinar for today. Today we're talking about cash flow strategies for the new world. So this webinar, we're going to be going through and talking around a number of things, and cash flow is certainly one of the key topics at the moment for most businesses. My name is Tanya Titman, and I'm going to be taking you through this session today. My role here at BDO is as National Lead for Financial Education. So we've been doing a lot of work in working with businesses right across the country and helping them to, I suppose, get the cash flow forecasting side of things under control within their business. There's certainly a lot of parts to this, and it's a very new way, I think, for many businesses to be operating. So many businesses have not had cash flow forecasting within their business, or they've been doing it in a way that doesn't give them the detail that they now need to be able to forecast into the future. So we're going to talk about a little bit of that today in terms of what a different approach needs to be, some models and some ways in which you can do that. And we'll talk about some tools that you can embed in your business to allow you to be able to forecast more accurately going forward, and those considerations that you need to take into account for the current environment that we're in. I'm happy to take questions throughout the webinar, so if there are any questions as we go through, please feel free to put those into the chat box, and I will answer those questions as we go along today. We will have a little bit of time at the end for questions as well, but I find it's often best to answer the questions as we go through. So what we're going to cover today is essentially how we're approaching cash flow in this new world that we're in. It's a very different environment, as I was saying, and it's requiring different actions and a lot more granular focus in terms of cash flow forecasting. There's lots of government support out there. There is plenty of ways in which you can actually bring some subsidies and some support and some funding into your business, but how do you actually understand how that all comes together with what's flowing out and you know, any reduction of income coming in? So it's really quite complex to do this forecasting in your head, and I find that many businesses are trying to do exactly that, and it's very hard to get any certainty out of what the future might look like. And that's the thing that we're really trying to address is, you know, how do you get certainty in this environment looking forward for the next 12 weeks and beyond when things are changing on a daily basis. So we're going to take you through some tips and ways in which you can approach that. Also just talking through 90-day plans. So I am a big fan of using a 90-day plan to really help focus on a quarter at a time. So just look at the next 12 weeks and what does the focus need to be, and build some action items into there, and try and have some level of accountability. So reach out to people that are around you to keep you accountable and keep on track. And I think that process of working in 90-day plans certainly helps as we go through this next sort of period, because for the next 90 days, I'd suggest the majority of businesses, their focus is around cash flow and what they can do and how they can stretch it. Beyond that, the next 90 days will have a slightly different focus if they can get the stability and the certainty around cash flow. So working in this way gives you a really good approach to just, you know, deal with what you need to deal with for the next 90 days, and to take a structured and a strategic approach to doing that. And we'll go through a few other bits and pieces as we go through today, just in terms of some director obligations to be aware of, and I'll also give you some options in terms of ways in which you can build some cash flow models into your business, and we can assist you with doing that. So let's have a look at cash flow forecasting. Now, I know today we've got a number of people from various different organisations and different roles that are with us on the webinar, and so cash flow forecasting for some people is probably a business as usual. It's part of the business. You've always had it in place. But why is it different now? And I think what is different about it now is that it is more granular. So many businesses are needing to look at this on a daily basis, if not weekly. And probably coming into this, many businesses were actually working on more of a monthly sort of cash flow forecasting model, or none at all. There's very many businesses out there that actually have not had any level of cash flow forecasting. They would have been operating by the business bank account and just really using it in terms of understanding that they've got sufficient cash flow, and it was never an issue. So this has just brought a whole lot of, I suppose, uncertainty into business, and that financial stress that people are feeling is just one of the worst things that you can possibly have. What helps with that financial stress is actually getting some certainty and some data in the form of a cash flow that can help you look forward and actually see what the next 12 weeks are looking like. As a minimum, I really believe every single business needs to have that in place. And if you don't, then you need to find ways in which you can build that into your business process and have a procedure within your business where you are looking at it, revising it as information is coming to hand. So this new world cash flow forecasting is moving much, much faster in a much more granular way. Information is coming in on a daily basis that's impacting what that cash flow is looking like going forward. So it's being able to work with a model that is pliable enough to be able to sort of pull certain levers, to look at what if scenarios, and to forecast out with a degree of certainty. And you might think in these current times that that's very difficult to do, but when you put the effort in and you build a model that actually has that all of those factors into it, then you can get a degree of certainty. But it's not a set and forget thing. You need to work on your cash flows, and you need to make sure that you're continually updating them. So I'm just going to go back to real basics here. So for those of you that actually are all across cash flow, apologies here, but it is important to understand, I suppose, my view on how we should approach a cash flow forecast and why it's perhaps a little bit different to maybe the way that you've approached it in the past. I have many people, accountants and financial controllers, coming into our workshops and working with our models, because it just creates nice, simple cash flow models that become a very good tool to embed within a business. So I'm really talking about this from a business perspective, not from an advisor perspective, but these are the things from a business that you need to embed within your business and within the business processes. So your cash flow forecast has 4 elements. It has the cash balance, the opening balance, it has cash coming in, it has cash going out, and then it has a forecasted closing balance. So those 4 elements are quite simple to understand. And what we're doing with cash flow is we're really modeling how the cash is moving through your business, which is quite different to a profit and loss statement. So there are very much 2 different concepts. So it's important to understand your profit and loss statement is quite different to your cash flow. And there's a whole number of reasons why that we probably don't have time to go into today, but understand what we're doing here is modeling cash flow. So it's really about that cash coming in and out of your business. Now, when you're looking at these different elements, the cash flowing in can come in a number of different ways. So you have cash flows that come into your business which are of a recurring nature. So you might have certain things that are coming through on a regular date every month, and it's the same amount every month. So that's what I would call automatic cash coming in. So it's going to have a regular and recurring nature, as opposed to cash that's flowing in that is a little bit less certain. So you might issue an invoice to someone to pay, and they have the control over when they pay you. So that relies on how good your debtor processes are and how you're chasing up those accounts receivable in your business. But it's a different timing element, and you have less control over it. So by breaking the cash that's flowing into those 2 categories, it helps you to see your cash flow a little bit differently. And this is the sort of model that I like to work with and embed in businesses. The cash flowing out, again, has different elements to it. So you have cash that's flowing out automatically, which you might have signed up to subscriptions that are charged to a credit card, or you've got amounts that are coming out on direct debit. They come out on a certain date every month, and you can't do much about them. So they're going to flow out of your bank account. You don't have control over that unless you cancel it. and then you have the amounts that are flowing out, which might be an invoice that you're paying. You have much more control over those elements because you have the power. The cash is in your hands, and you decide when that money gets paid. You might be able to create payment plans. So breaking up the cash flowing out into the various elements gives us more control and more visibility over the things that we can influence and the things that we can't. So if you're working on a cash flow forecast, which essentially has these 4 parts, and you've lumped everything together in terms of the cash that's flowing in and the cash that's flowing out, you're missing the opportunity to really get down to the detail and understand those things you can influence and those things that you can't. And that's kind of the power and the model that we've been working with businesses for many years now. And I think it is a really great model because it does give that great granular look into your cash flow and the levers that you can pull in a model that is easy to understand. It's not something that is technically difficult to understand, and it works well in a business sense. Okay, so I'm just going to go through and look at a few areas. So understanding there are different elements and timing. There's also some strategies available in order to stretch your cash flow further. And when you start getting into this cash flow forecasting, it's actually it's really quite addictive. You can get in, you can look at the things that you can stretch, you can look at the ways in which sometimes you can move a payment from one week to the next, and that will solve a cash flow crisis. So it's sometimes understanding that, you know, the movement of things and your options in which the levers that you can pull to move and extend your cash flow, being able to access them fast and to see them and to pull those levers will resolve a whole lot of issues for you in terms of stretching your cash flow. One of the things that you need to start with is actually looking at expenses. So I'm sure that many of you have already gone through this process in terms of, you know, when times get tough, we go to look at all of the expenses within a business and start looking at where we can cut back. Now, you can review your profit and loss statement, and you can look for these particular line items. One of the things that you need to do is just not look at the actual line item, look behind it in terms of the transactions that are there. And I really like to work with businesses and get them to remodel their financial statement so that we create this category called discretionary expenditure. So that is this is for a business owner to look at their information, and all of the things that are not necessary for the normal operations of the business, we put under a category of discretionary expenditure. And that's just purely really identifying the fat in business. So when times get tough, you've got a go-to list of where you can start cutting back. And these are the things that are not going to impact on your business strategy. So if when this whole sort of COVID-19 crisis hit, if the first thing you did was look to cut back on staff wages, for me, that's the last thing that I would recommend looking at. It's actually the first thing you've got to look at is where is the fat in your business. And every single business that we go through this process, there is definitely things that they can cut back on which are not going to impact strategy. So you're trying to look for those, the non-critical expenses, and often, you know, they're little things like subscriptions. If you look within software subscriptions, I often find that, you know, there's plenty of things that people sign up to and they forget about. But going through and actually scrutinizing the transactions within each of these line items will really help for you to find the things that potentially you could put on hold or you could cut back on. So they're the things, and sometimes it's only small amounts, but over the course of going through all of your expenses, it adds up over that time. So certainly have a look at that. Look at the expenses that might even be able to be deferred. And when you're looking at your balance sheet, so it's also important to look at that. Look at any assets that potentially can be converted to cash that may be underutilized. When you're then looking at cash flow, we're looking at what can we do to negotiate different payment options and stretch cash further. So there's lots of things that we can do just once we've got the data. And it's also really important that you keep your financial information up to date so that you can do this on a regular basis. So this is not something that you would dive in and do once. This is something that you should be scrutinizing every single month and reassessing. Now, I talk about cash flow levers. I've mentioned that word a fair bit, and these are really the things that you can pull to understand, the impact and the way in which you can stretch your cash flow. And we talk about these in terms of either increasing the cash that's flowing in or decreasing the cash that's going out. And so when we're talking about price and volume, your pricing strategy in your business is really critical towards increasing your cash flow. So making sure that your pricing strategy is right. A difficult one at this point in time. If your business has been impacted, it's difficult to sort of start having conversations around pricing. But for some people who, they're looking at pricing strategy now because perhaps margins have been squeezed in the past to some degree that they didn't have any flexibility. And now demand might have actually been such that there's higher demand for their products. So they can actually get some breathing space, increase their pricing to get the margins that they need to get to make their business profitable. So pricing is always something to consider, as is volume. So some businesses are very much driven by price, others are driven by volume. So what can you do to increase the number of customers that you have? By pulling those two levers, they're not going to have an immediate impact on cash flow today, but it's a strategic move that's going to increase your cash flow in the future. Then you've got accounts receivable. So I've mentioned before, if you have people that owe you money, now this is something that you should be putting a lot of effort into, is tightening up your processes and keeping a really close eye on a daily basis on your accounts receivable balances. You may have found that they've started to stretch out a little bit from where they were potentially a few months ago. And if that is the case, you've really got to stay close to it. So put strong process around it. You might need to put more resources around collecting those accounts receivable. And you might need to be negotiating payment plans with your customers to ensure that they actually don't become bad debts down the track. We are heading into a period where in the next 3 or 4 months, there's going to be a lot of stimulus that is going to stop. And I think there is certainly some concern there in terms of what happens then. So you may not be feeling it now, but please keep really close to that process and ensure that when we get to that September, October period, that you're not going to have a situation where you've got a lot of bad debts that are going to have a major impact on your cash flow. We also then have assets. So looking at, and I mentioned this briefly earlier, looking at utilization of assets. So if you've got assets that are idle, how do you use those to generate revenue? This is something that happened across a lot of the gyms where they weren't able to have people into the gyms, and a lot of them, instead of leaving the gym equipment sit idle, rented it out to their members to create a revenue stream, at least to get them through. So some really interesting things happening in terms of some innovative ways about utilizing assets in the business that became underutilized through various shutdowns. Expenses we spoke about. Inventory is another one in terms of looking at how do we turn that inventory over faster. Now, if you have been impacted and your inventory is sitting idle, how can you actually start moving it? Are there different channels that you can tap into to sell? If you're reliant on wholesale, then perhaps moving into a retail channel might be able to move some of that, moving online. A lot of businesses really have fast-tracked getting their businesses online through this period, and that's in order to turn that inventory into cash. And then we've got our staffing lever. So just making sure that you're utilising your staff and you have the right staff resources for what your business needs at this point in time. So there's a number of different levers there that you can pull, but it all starts with getting the data in the first place. When we're looking at the next step, it's really around government support. And I think that this is something that we have received a lot of information on. I know that we've provided a lot of webinars and a lot of information out there through our website, and there's an enormous amount of information around what's out there in terms of government stimulus. So I do find that most businesses are across this, and that's certainly what we're hearing at the moment. The things that I would just be able to like to flag to you is that It's one thing to understand the stimulus and to start sort of applying and getting that through. It's another thing to understand the cash flow impact. And you only need to look at things such as the PAYG cash boost and the JobKeeper subsidy to know the complexity that is around that whole timing and when it comes through. There's a deferred timing there with JobKeeper, so understanding net wages going out, JobKeeper coming in, PAYG withholding being withheld, and BAS payments. It's a very complex piece in terms of your cash flow. So getting access to these stimulus items is great, but then you've also got to understand what the cash flow impact is. And don't forget about the minor benefits. There is a lot of benefits out there which are really great. And they might only seem minor, but sometimes these smaller things, they all add up and they all provide assistance to the business going forward. So a lot of attention's going into the bigger ones that we're seeing, but just be aware that there's plenty of things from a local councils and sort of local communities where there's a lot of other minor benefits available. Some are automatic in terms of there'll be an automatic benefit that you'll qualify for, but some you do need to apply for. And it's good to just be aware of all of the range of different stimulus and subsidies available out there for you. The other point is just to understand any of the long-term impact. So where you're taking up some options that might be a deferral as opposed to a subsidy, so it might be deferring some of your bank repayments, or it might be deferring some tax obligations. Understand that that is creating a liability for you, and there's going to be a need to pay that back somewhere down the track. So again, you need to factor these things into your cash flow forecast, and you need to make sure that you're not creating too many liabilities along the way, because that does create quite a big problem at the other end of this. So just be aware of that one and ensure these things are all factored into your cash flow. Now, the 90-day business plan I mentioned earlier is a really great way just to compartmentalize things and to keep focus in certain areas. It can seem really overwhelming to go forward and to understand all of the different options that are available and to get a plan together for the business. But I think if you take a step towards getting a 90-day plan in place and work in that sort of routine of 90-day plans, it really helps for you to stay focused and to do the things that you need to be doing within that next 12-week period. Some of the things that might factor into that are standstill agreements, so negotiating with some of your major suppliers and looking at ways in which you can extend payment terms or organise some payment plans. Understanding that this is a deferral mechanism, so it is really important to be upfront. The worst thing you can do is bury your head in the sand and hope that this is going to go away. You need to be open and transparent. You need to have your financial information up to date. It's very hard to go into any of these arrangements unless you have some certainty around what your forecast cash flow is and you have your financial information up to date. It's very difficult to have any of these conversations or to have any positive outcomes from it if you don't know the facts going into the conversation. And the large part of that is just being able to sort of forecast cash flow, to know what you need to ask for and for how long you're going to need support and at what point in time you'll be able to recommence payment. So that certainly will be supported by a cash flow forecast. Also, capital sources. So again, when you're doing your forecasting, you'll be able to see where there are gaps and where there's funding requirements and at what point you're going to need those funding requirements. So then it comes down to understanding what your options are and what sources of capital, be it through banks, excuse me, or whether it's through shareholders. So looking at all of the different options available to you to fill any funding gaps. Now, a lot of people have jumped in and looking at all of the different loans and various incentives that are out there to get some great funding options through the stimulus. but I don't know that, there's a lot of work that went into actually understanding whether that money was required or not. So I think it's really important to understand before you take on a liability, do you actually need it? So again, making sure that you're looking at that cash flow forecast, understand what the gap is, being able to be clear on your plan and what those funds are going to be utilised for, instead of just grabbing anything that is out there. And potentially, if you can get through without the funding, that's a better option. If you can find ways to extend your cash flow through strategic mechanisms, that's far better than taking on additional liabilities along the way. So bringing all of that together really comes into a 90-day business plan, and it's just a simple piece which breaks it down, month by month, week by week, and gives you a focus and an accountability piece that you're going to do certain things by a certain date. And for this next 90-day, the theme is very much around cash flow for most businesses. So what are the things you can do to stabilize, to extend your cash flow, and to make sure that you can get through the next 90 days? Once you've done that, the following piece is the next 90 days probably takes a little bit of a different slant and starts focusing on some forecasting and remodeling your business from a budgeting point of view. What does the next 12 months now look like, now that you've got some certainty around your cash flow position? So a 90-day protocol to put in place in your business is really good. It will keep you focused in certain areas and stop the overwhelm in terms of all of the options and all of the noise that is out there at the moment. So the final piece is really bringing that all together and working closely with your accountant and your advisors to monitor your cash flow. So implementing your plan is really important, and working with your relevant stakeholders, your accountants, your bookkeepers, your advisors, to get that plan in action. So I really, I recommend having a degree or having someone to hold you accountable to that plan. It's very hard to sort of go through this on your own. You want to have your advisors and people around you to keep you accountable. And the cash flow forecast is something that I like to set as a Monday protocol. So every Monday you update it, you look out for the next week, you work out what levers you need to pull, what do you need to put into your plan, and then you work through and deliver that for the next week. And the next Monday, come in and update it again. It will give you some real good clarity to understand how long your cash flow is going to last. And then if you know that that is 2 months or 3 months, then you've got time to start working with your accountant to build the strategy around it. And that's really important, because there's definitely things you can do, but you need to have that time to build those strategies to get them to kick in and start having an impact. We can't put a strategy in today to deliver something tomorrow, but we certainly can within a 2 to 3 month period. And then the final thing is really to just keep an eye on the future. So when you're looking at, I suppose, beyond this next period, it's really good just to consider that you will be looking at things other than cash flow. And cash flow is one piece. It's very much the critical part at the moment that many businesses are focused on, but it's one element of your whole financial management. So you have your profit and loss, you have your balance sheet, and you have your cash flow. And looking at any one of those in isolation will actually give you an incorrect view of your overall financial position. So you need to look at the three together, and cash flow just is the focus at the moment. But always make sure that you've got your financial information up to date, and you are looking across all your balance sheet, understanding that what liabilities you're collecting, understanding the asset position, and do you have underutilized assets. So really important to keep on top of that. Also looking at your profit and loss and making sure that you have a commercially viable business. So doing your profit and loss modeling and your budget is really going to give you that insight about, is this business commercially viable? What do I need to do to transform it and sort of reimagine it almost into the future? And your cash flow is then the funding element. How are we going to get through this? And do we have sufficient cash flow to get through the next 90 days and beyond? It's then important to really keep assessing the plan. So it's not a set and forget thing. You need to actually update your plan on a regular basis, and you need to continually take into account the things that are coming to hand. So there's lots of information coming in all the time on a daily basis for many people. And so bringing that into your plan and continually reforecasting and relooking at what the impact is of this information and how does that change the future for the business. And as I've said a number of times, try to avoid collecting liabilities. That's probably one of the main things that I would really try to get everyone to take on board, is that the deferrals are great, but it's probably our last thing that we should be looking at, because all we're doing is collecting liabilities, and my fear is that, you know, that is going to be a bigger issue for many businesses down the track. It might save and make it easier now, but I would much prefer to see businesses using other options to extend cash flow and use that as a last resort, because that will create more problems for us down the track. So understanding your obligations, just a few final things that I wanted to run through today to take you through is looking at your role as the company director. Now, there has been some information that came out a little while ago, fairly early on, about the 6-month moratorium on insolvent trading. And it is important to understand that as a director of a company, that you do have other obligations, and you have fiduciary duties, acting in good faith, care and diligence, and you also have the requirement to keep your financial records up to date. So please make sure that you are staying on top of all of those financial obligations. Your business may be in some level of hibernation, but it is still important to keep your financial records up to date. And it's also important that you keep the right systems and processes in place to keep your business operating as much as you can. Also, as a director, make sure that you are accounting for any of those liabilities that you're collecting along the way correctly. So keeping those financial records accurate is a critical part. So just a couple of points there to make sure that you're aware of those obligations, and even as far as lodging your ATO requirements, so BASs and tax returns. So still keeping on top of those is really important throughout this period. Even if you can't afford to pay, you should always make sure that you're keeping your lodgements up to date, and just keeping people in the loop in terms of what your current situation is. Your cash flow will be really important to have those conversations. So what if your plan isn't working? So you've done everything, you've stretched your cash flow as much as you can. Your 90-day plan isn't having the impact that you would like. And there's certainly concern in terms of what the business is looking like. Well, there's certainly options available, and I think it's really important to be as proactive as possible. If the situation isn't looking great, then you need to ensure that you're talking to your accountants, your advisors, and to your suppliers, because there is a lot of goodwill out there. People are certainly very supportive of helping people through the crisis. Your banks will be very supportive to help you. So just make sure that you are seeking assistance, and you do that with the right information in front of you. So you do that with data, with the facts in front of you, with a clear cash flow forecast, with your financial information up to date, and that will stand you in really good stead to go into another round of negotiation. So it might be talking again to your financiers. It might be that at the first point that you spoke to them, that you didn't have all the information that you now have. I think we have a fair degree of information and understanding of where things are at now. Some businesses are starting to open back up. There's a little bit more, I suppose, optimism out there, and you can get your financial information up to date, get a good cash flow, and go back into those negotiations as a round two to see what you need to get you through this next period. And also, looking at the innovation side of things, because, and this is something that's particularly of interest to me, because I do find there's some really great examples of what businesses have done through this period to innovate and to put themselves in even a stronger position once things do open up. And we've seen plenty of it. There's been lots of great examples reported across the media, and it's really good to see. The opportunity here is that we've actually been forced to move to different operating models that possibly we would not have done otherwise. And what that means is that now when business returns back to normal, do we actually have additional revenue streams that we didn't have before? And if that is the case, then building that into your forecasts, I think it actually puts a lot of businesses in a stronger position where they've been able to innovate and to do things differently. And the opportunity there is to maintain that and to sustain it into the future instead of just going back to business as usual. So I'm really encouraging businesses to remodel, to reforecast, and to look at what does it now look like to actually keep those two revenue streams going forward, and what operationally needs to change to support two revenue streams versus one. So some really interesting things happening there, and I would certainly encourage you to think about innovation in terms of your business models and what that looks like and what opportunities it might create as we go forward. So just a bit of a recap and next steps. So we've gone through looking at managing cash flow, why it's different, some different strategies that you can build in, and the 90-day business plan. So hopefully that's given you some good options and thoughts that you might go back and start reviewing your information and looking at, I suppose, how you could build out a model. If you feel that you've got this covered, that is great. If you feel that you don't have a model that supports what you think you need to do to get that clarity around your cash flow, then there's ways in which we are assisting businesses to do that. Now we have the model that I've been speaking about, and I'll show you what that looks like in a moment. But we essentially built a model for businesses, not for advisors, but for businesses to embed in their business to give them a process to manage cash flow easily. And we take people through on an online course. So there's a self-paced course which you get the tool and you get the guided videos and instructions in terms of how you build that tool into an effective 12-month cash flow forecast. We also run virtual workshops where we bring people in and work together with our advisors to actually build the models with you in session in half a day. So either option works really well, and it's the same model that you're working on with both. It depends whether you're someone that likes to do self-paced in your own time or you like to be doing it in a guided environment. But we're really passionate about getting cash flow models into businesses because it is the number one thing that you need to have at the moment. Now this on screen shows you a little bit about what the model looks like. It's a very simple tool. It's embedded for you to use in your business. So it needs to be really simple and straightforward for people to use and to get clarity around what cash flow looks like. You'll see down the bottom, there's a lot of different tabs and we color code them from cash coming in to cash going out. And we've also incorporated the PAYG Cash Boost and the JobKeeper subsidy into the cash flow forecast. What this does is takes a lot of uncertainty out of this whole cash flow forecasting and shows you the impact of what happens when these subsidies and offsets come through and what the cash flow then looks like. So we're building this out with all of the information that you need to get through these next 90 days and beyond. And these tools are essentially embedded into your business to use forever and a day. I have people that have been using this same model for more than 2 years in their business, and it just keeps rolling. So once it's built, and that's the purpose of the workshop, is we build the 12-month model. Once it's built, then it just becomes a weekly process to keep it updated. And it's a really, really effective tool that essentially steps you through and gives you the levers that you can pull. It breaks everything out puts all of your tax and super and all of those lumpy payments in one tab that you actually can see all in one place, and we can forecast out for 12 months. Your wages are set out separately. The calculators are designed there to be really simple for you to tick the boxes and to factor it into the cash flow. And what you get at the end is a really nice overall cash flow position, which shows the elements of cash flow. So your opening balance, your cash coming in, your cash going out, and then a forecast closing balance. When that bottom line is green, as it is there, it's all great. But if you have elements of red in that bottom line, that's an indication that you don't have sufficient cash flow in that week. You need to come back. You need to reforecast out for the various elements to then stretch the cash flow further. So this is the process that we go through, and we take people through understanding cash flow and building these models in session. And the purpose of that is really to just give you the tools and the clarity to go forward to navigate this next 12 months and beyond. And this is a standard tool that is really, it's just a really great business process to your business. So if you've never done cash flow forecasting, or you're somewhat uncertain as to whether that's even possible, I can guarantee you that it will give you a lot less stress in terms of, you know, taking all of that manual calculation out of your head and give you some certainty about what cash flow looks like in the future. So that is the main areas that I wanted to cover off on today. Now, if there are any questions, I'm happy to take some questions now. But otherwise, please feel free to contact me. My contact details are on screen there. Happy to assist you or answer any of your questions. And I hope that today that's been useful for you and given you some things to think about in terms of building a cash flow forecast for this new world. So thank you very much for joining me, and all the best, everyone, and I look forward to hearing from you.